is Alex, Senior Account Executive at GDMFX with your European Session Morning Outlook. We'll start with the North American markets. The data which came out last Friday suggested that inflation may be nearing a level that could encourage the Federal Reserve to raise interest rates. The Consumer Price Index rose 0.2% in August, driven by higher rents and the surge in healthcare costs. Investors have been worried that the end of low interest rates may increase corporate borrowing costs and drag stock values lower. On the yearly basis, overall consumer inflation rose at a 1.1% rate in August, up from 0.8% in July. We also had the Reuters Michigan Consumer Sentiment Index, which came out 1 point worse than expected at 89.8. The good CPI data, however, did enough to push the dollar up last Friday. The interest rate decision is this Wednesday. The Dow Jones was 12 points down. The Nasdaq ended only 6 points up. The DXY is up to 95.85 from 95.37. The biggest mover was USD Swiss franc 85 pips up. Next biggest USD CAD 50 pips up, and USD JPY is 30 pips up. Only a small movement on Friday. Today we're going to have the NAHB Housing Market Index, and that's all for North America. Onto the EU markets. European stocks finished in negative territory Friday. Part of the reason was a sell-off of Deutsche Bank shares, set off by news late Thursday that the US Department of Justice asked Deutsche Bank to pay $14 billion to settle civil claims related to mortgage-backed securities. The EU Leaders Summit ended last week on Friday, with the EU leaders refusing to share a stage together and an open disagreement over immigration and austerity. For the week, on Thursday, ECB President Mario Draghi will speak at the European Systemic Risk Board in Frankfurt. And the week ends Friday with the release of the German manufacturing and services PMIs, which are medium impact indicators but can have a positive effect on the euro if they show higher numbers than forecast. Alright, onto the UK markets. The pound had its biggest weekly drop versus the dollar since the Brexit vote. Sterling depreciated with 1.4% last week, of which 1.2% was added on Friday, as investors were rattled by comments from senior EU officials that the UK will face a bureaucratic hell in the separation negotiations. Having this in mind, the Bank of England has placed another rate cut on the table for 2016 in the case of troublesome negotiations with the EU. The week ahead is promising little in terms of events that can drive the sterling further down. However, the general trend is for the pound to extend its losses in the mid to long-term perspective. The FTSE 100 was 29 points down, closed at 66.99 on Friday. We had good movements. GBP USD 248 pips down Friday against the JPY, 225 pips down Friday. Against the Australian dollar, 290 pips down Friday. Against the Canadian dollar, 265 pips down on Friday. And against the New Zealand dollar, 220 pips down on Friday, 255 pips range. This week, as I mentioned, won't be too eventful for Britain. We'll have the public sector net borrowing, Bank of England quarterly bulletin, Bank of England MPC member Cunliffe speech, CBI industrial trends surveys, and survey orders. And that's all. Onto the Asian and Pacific markets. Asian shares traded mostly higher today, as fears receded that the US Federal Reserve would raise interest rates this week. It's a bank holiday in Japan today. It's a respect for the age day. So the events this week will be on Tuesday, Australian Royal Bank of Australia meeting minutes. On Wednesday, Japanese Bank of Japan IR decision and press conference. Exports, imports, merchandise trade balance, adjusted merchandise trade balance, New Zealand dollar mid-year economic and fiscal outlook report. Thursday, Japanese foreign bond investment and foreign investment in Japan stocks. And Friday, Australian Royal Bank of Australia's Governor Lowe will be having a speech. All right, last section for the day, commodities. Baker Hughes oil rig count. Drillers added 2 oil rigs in the week to September 16th, bringing the total rig count up to 416, the most since February. Gold prices slumped to a more than 2-week low on Friday as a broadly stronger US dollar and jitters ahead of next week's highly anticipated Federal Reserve policy meeting waited. And oil prices rose almost 2% on Monday after Venezuela said OPEC and non-OPEC producers were close to reaching an output stabilizing deal, and as clashes in Libya raised concerns that efforts to restart crude exports could be disrupted. Clashes in Libya have halted the loading of the first oil cargo from the port of Ras Lanuf in close to 2 years, while also raising fears of a new conflict over Libya's oil resources. S&P 500 index had a range of 21 points at 2,139 now. Gold had a range of $12 at $13.15 now. Silver had a range of 36 cents up to $19.13. WTI crude had $1 range up to 43.81 now. Natural gas is trading at 2.92 at the moment with a range of 10 cents. That's all for today's outlook. Thank you for the attention, and I'll see you next time. Goodbye.